Hi, my name is Jeff Popova-Clark. I'm the founding partner of dataanalytics.com. Over the last 21 years, data analytics has helped organisations from multiple industries build and transform their data capability. As a result, we've developed a proven framework for many aspects required to do this transition within organisations to take best advantage of data and data analytics. Today, we're going to look at the high levels of one of those frameworks, particularly data governance and strategy. The complete framework is only available to data analytics clients, so see this as just a teaser or an introduction to some of the foundational aspects of our enterprise data governance framework. As data volumes have exploded, this framework has become more and more important for our clients. So, data governance and management. Often organisations believe that data strategy is primarily about enhancing corporate strategy, and without doubt it's a very important part of corporate strategy. However, there's lots of aspects to organisations that's above and beyond the corporate strategy. So this corporate strategy is the part that is modifying the corporation or organisation in order to achieve new or changes to the current operation. But there's always business as usual that needs to continue. For some organisations, the corporate strategy is relevant to only about 5% of their activity, even though it might take up a large proportion of their executive attention. However, business as usual also has a great need for data to be able to improve its outcomes and to monitor events as they occur. On top of that, there's also those internal parts of the organisation that service their customers are inside the organisation. So people like HR, finance, risk management, internal audit, and so on. And those organisations within your organisation also have a requirement for data and data analytics. On top of that, there's also external agencies that are asking for information from your data providers within your organisation. So there may be people that organisations that your organisation works with, your partners. It could be your regulators. It could be people such as the statistical agency within your nation. In Australia, we've got the Australian Bureau of Statistics. It could be the taxation area, prudential areas for those in insurance and finance. It could be a parent company for those who have global parents. It could be people who are interested in putting stories out in the media. It could also be industry bodies who are trying to coordinate various organisations as part of the industry. It could be university or academic researchers. There's plenty of externals who have information that is not necessarily required by your organisation, but does need to be provided by your internal data providers. So what sort of services do they provide in order to achieve those business outcomes? Well, obviously there's investigations and research where they're trying to look at a particular business problem and understand it to a great level and great extent. So they might be doing modelling, statistical modelling or financial modelling. There are those where they're just trying to detect if any problems are occurring. Are we heading into an area where our currency is devaluing or inflating significantly and therefore impacting our ability to sell or to purchase overseas goods? Do we have an aging workforce that we may be losing a lot of intellectual capital in the very near future? Those kinds of problems, we need to be looking out for them. And once we detect them, we need to be able to assess them. How big are they? It may be a problem, but it might not be worthy of executive attention, or it could be that the problem is very significant and does require a response. So our data should be helping us understand those things. There's also workflow and system support. So that's the typical stuff you might find within an ERP, an enterprise system, where a transaction occurs and then it goes on to the next part of the workflow. So maybe someone needs to approve it, or the next person has to undertake some other part of the transaction. So we've got the workflow data that moves through. We have alerting. So there might be unusual transactions that we're very interested in. If someone approves an invoice for more than $1 million, or if they're entering in the same bank account as an employee into the system, those kinds of things. So not just fraud, but also with regards to problem detection as well. We may be wanting to do logging and auditing and evidencing compliance. So in order to be able to demonstrate to our regulators that we are actually complying with the legislation, we might want to do some automatic capturing of transactions. We may be wanting also to just let people know that we're actually capturing these transactions, so there's some compliance pressure on them to not undertake unusual or transactions that are not in the interests of the organisation. We also need to do, and this is the standard one, I deliberately put this one further down, this is the standard thing that people think of with regards to data, which is your reporting. So things like your number of FTE in your organisation, or the age debtors report, or those kinds of things. So communicating out how things are going might not necessarily just be performance, it could also be the actual reporting of how things are going to your stakeholders. Incentivizing compliance, so we may need to actually monitor the compliance in order to be able to say, right, if you do this number of orders, so say for instance you want to make sure you're getting a good order invoice process, what proportion of your invoices in terms of dollars or counts have actually had an order, and so you might incentivize your management to increase the number of order-based invoices, and so in order to incentivize that compliance, you need to be able to monitor it. As we mentioned before, you want to be able to progress, undertake the performance assessment, and monitor the progress against things that you may have decided to do in a corporate strategy. So it's a very important piece. And then of course there's just the straight out data products that you have to do for your externals. So here's some of the considerations you need to take into account when you're undertaking these data products and services. So firstly, we have data quality. So that's basically making sure that the data is fit for purpose for what you're trying to achieve in one of those data products and services. This is often misunderstood as being data quality, being data is even bad or good. Most data is good for what it was designed to achieve. Often where the data quality problem comes in is when we're trying to use data in a way that it wasn't designed to be used. And that's a very big area in the area of data analytics. Data sharing and open data, so we want to make sure that the right people are able to access the data. So that's not just only provide it to the people we can imagine could use it, but making sure it's only restricted to those people who it would be dangerous for them to have. So we have to take into account things such as privacy, and in government, maybe national security, commercial in confidence with our partners, and so on. Data custodianship and stewardship, so who within your organisation is responsible for the sharing and the quality of the data, making sure that people have got the roles and responsibilities to ensure that the data is meeting the business requirements for which it was captured. Data security and access, making sure that we can see who has access to it, ensuring that the right people have access to it, that those people who change their circumstances over time and no longer require access have their access removed, and making sure that those who do need it are able to access the data easily. Data literacy and culture, that's a really important piece with regards to training people who are using data to make sure they can understand how they may that they understand the terminology that's being used, so that they're interpreting the data that they're seeing accurately, and making sure that when a decision needs to be made for which data does exist, that is actually utilised. Data privacy, confidentiality, sensitivity, classification. So that's the sort of stuff I was talking about before with regards to the data custodianship and security. So just making sure that those issues are kept in mind. Obviously, in a lot of these areas, pre-assessing the data for its classification and sensitivity helps it to be treated with the right controls. Data lifecycle management, so that's just making sure that we're adequately backing up and archiving data so that our systems manage to continue to perform adequately but still achieve the outcomes that we need. Data product catalog, so Not only do we have lots of data sets, but there's also our data analysts will be producing data products that value adds to that data. Before long, it starts to become a data swamp. So a great piece of technology is the data product catalog, which will tell you what you actually have, what it can be used for, who you need to go to see to get access to that data, and so on. And very similarly, data definitions and metadata helps with your data literacy, but what it's doing is providing a place where all the definitions of the data is able to be kept. Data lineage and provenance. So what that's about is making sure that for any downstream data product, we're able to see upstream where the data came from, what transformations it undertook over time to get to where it is, and also how that data has transformed over time. So if it's moved from one system into another, maybe the definitions have changed slightly. So it's important to keep all that in mind as well. Data asset value and brokerage. So some of our data that we've been collecting may also be valuable in the market, and also we should understand how valuable they are to our business, so that we can make some determinations about the amount of effort we should be putting in to protect that data and make sure it keeps its integrity. And finally, data architecture and modeling. So that's primarily about ensuring that we understand how the data fits together and can be understood together. So this is where data strategy and data governance come from. So with regards to that above process we just went through, data strategy is how we plan to do better with that data. Data strategy is not how we plan to achieve the corporate strategy. As we can see, it's meant to be how we can use data across all of those areas, of which the corporate strategy is a very important part, but it includes all of the aspects of how we plan to get better with data to achieve those business outcomes. Data governance is how we make decisions about data. So who is responsible for changing any of the things on the right-hand side or improving the data products and services in order to achieve those outcomes. So who makes the decisions in terms of who has access to what data, how the data, whether the data product catalog is up to date. All of those kinds of decisions are sitting within your data governance, and should also have things such as what standards you're going to adhere to make sure you've got some consistency there with people in your industry, or at least across your organization. So hopefully that makes it a bit easier to understand what data strategy and data governance is, because there's a lot of misunderstanding of that area. And just as an example to dive down, we'll just go into one of the data considerations. We'll go into data quality. So this is another data analytics framework. I don't think there's any other data quality area that's quite as comprehensive as this one. And it's from the point of view of the data analyst. So data quality is dependent on what you're trying to use it for, not inherent to the data itself. So firstly, does the data exist to achieve your decision making or analytics outcome? Is it complete? So do we have the data for all the period that we want to know about? Does it have historicity? So is it consistent over that period of time? Does it have integrity? So is it actually measuring the thing that it claims it's measuring? Provenance and lineage, I went a little bit over that in an earlier piece with regards to data governance, but essentially it's making sure that we understand all the transformations that have gone through so that we have a good understanding of that data. And if we don't know the provenance and lineage, by definition the data is of lower quality because we don't fully understand it. In terms of consistency, so if we've managed to get the data from multiple systems or multiple parts of our organization, were the definitions the same? Was the completeness identical across those areas? So consistency across the scope and over time. So making sure that those definitions and completeness were consistent from the time of our analysis all the way through. Obviously accuracy is very important, so wherever there was estimations undertaken, we would like to believe that they were fairly accurate. The validity, are they actually valid to the particular thing that they were saying that they were measuring, which is a little bit different to integrity. Integrity is to do with ensuring that it is following the rules all the way through. Interpretability. So if we have something that we don't really understand, we know what the measure is and it can be completely accurate, and it may even be valid. We might not know if it's valid, but if we don't understand it and we can't interpret it, then it's not very useful to us. Consistency in terms of logic. So this is things such as finding data such as 400-year-old humans in your customer database, or pregnant males and things like that. So basically finding data that theoretically is about the same particular individual or entity, and it can't possibly be the same because it would be illogical. Uniqueness. So that's just making sure that the data that you're getting is not coming from multiple places and disagreeing with each other, so that therefore there is a single point of truth. Atomicity is making sure that for your particular analysis you've got the data at the right grain. So it's pointless trying to get distances between 2 points if the best you've got is at the state from which the particular event occurred. So travelling from state to state will be the same. If it's always going from Queensland to New South Wales, it'll always be the same amount of distance. Whereas if you've got it down to the lat long, you would be able to get it down to a very low level and be able to work out the distance. So that's where atomicity comes in. Availability. So this is about the dynamic nature of your data over time. So making sure that once you've got an analysis going and a data product going, that is available to the people who undertake the decisions. So that it could be that the data is based on information that isn't refreshed sufficiently frequently, or isn't available to some parts of the organisation that need it. So that also is a data quality issue. Integratability. So if, for instance, you're trying to mash data from a finance area and a HR area, you need to have some method of bringing them together. So maybe the organisational structure could be brought across, but those two need to be relatively in sync in order for it to be integratable. Timeliness. So how quickly is the data able to get to the decision makers? It's no point if you're trying to make some decisions about a rapidly changing environment if the data is only updated quarterly. So it needs to be relatively quick. And on top of that is it's not just the frequency, but also how quickly it gets from the event to the decision maker. So currency is also very important. So as you can see, there's a large number of dimensions of data quality that you need to assess to see whether the data is sufficient quality for your analytics requirement, and you need to assess across all of those. Many of those things change depending on your analytics requirement, so you won't be able to give a single data quality measure to a piece of data or a data set. It'll be dependent on your requirement. And just to break down, really hate seeing that data goes to information, goes to knowledge, goes to wisdom pyramid, so I thought we'd throw in our data analytics framework that we've had for a few years now. Basically, the idea is that knowledge is requires a human brain to contextualize, whereas information is essentially able to be captured in a non-human entity, where you can see that data can be a record, and also you can have data that's not a record, and you can also have records that are not data. You can have books, which is basically codified knowledge, but once you get over to the knowledge, that goes across into a human brain, and hopefully over time, wisdom means getting the general rules that you need from those from that knowledge to be able to extrapolate into uncertain areas. And so then you may be able to capture some of that knowledge into the books, but it won't be actual knowledge. It'll be information by that stage. Hopefully this framework will be far more useful. We certainly found it far more useful than some of the other hierarchies we've seen. Okay, so that basically is the data governance framework. If you'd like to know more about it, please contact myself, Jeff Popova-Clark, on +61 421 960 048, or jeffp@dataanalytics.com. Thank you very much.